Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance.
Hello and welcome to another episode of the Wall Street Lab podcast. Today we have for you Jorge Tavio. Jorge is Refinitiv's Market Development Director for Wealth in EMEA. Refinitiv is one of the biggest financial market data providers in the world. And prior to this role, he was the Head of Partners and Digital Innovation for Continental Europe with Refinitiv as well. He has over 20 years of experience in the market data industry. Naturally, we talk a lot about the financial market data business, how it transformed over the years. And we also talk about the biggest changes, not only for market data, but also for financial markets and the megatrends across all industries in general. If you like this episode, please leave us a 5-star review on Apple Podcasts or wherever you get your podcast from. And now, without further ado, please enjoy our interview with Jorge Tavio. Hello, Jorge. It's a pleasure to have you on. Welcome on the Wall Street Lab podcast. How are you today?
Good morning, Andres. I'm doing very well. Thank you very much. Thanks for having me over.
Yeah, it's a pleasure to have you. So we usually start off the show with asking, what is it that you do if you are at the dinner party and you have to talk to someone that is maybe not familiar with finance?
That's a very, very good question. It's actually one of those tough things that I can't even explain my mom because it's actually pretty tricky. So basically, we sell financial market data to power financial markets and capital markets and financial industry overall. And we basically connect participants with a vast amounts of data. And we basically take it from a point A to point B. And in the process, we normalize the data and we add value on top.
Who is Refinitiv and where does it come from?
So Refinitiv is the result of a partnership with our main shareholder, who is Blackstone, with our former major owner was Thomson Reuters. So Blackstone owns 55%, Thomson Reuters owns 45%. And the name comes basically from the combination of, bringing our heritage from the Reuters history in financial markets and a definitive statement in financial markets. So when you get Reuters and definitive, so you end up being Refinitiv. And that's basically where we're coming from. Just to give you some anecdotal history, we actually started our journey being actually fintech, even before digital technology touched the ground, way before. But it still was technology, right? We basically started by using carrier pigeons to communicate prices between different exchanges, different markets, right? And we used that at the time, which was like 1858. It was founded by Paul Julius Reuters. And basically, at that time, you may think that it was not that innovative, whatever, but it really changed the game because it was all about speed and reliability. And, whether you can buy, especially at the time, it was more about commodities, whether you could buy your stocks at a particular price, whether you can go long or short, it made a very big difference how fast you could get access to pricing and actually also liquidity. So we started back then. Then we innovated also with the undersea cable, right? Just to give you an example, as another anecdote, the pound to dollar is popularly known as the cable, and not that many people know it, but it's known the cable because we had the cable that was actually trading it, right? And this is just another moment in our history where the world is changing and we are adapting, basically.
So you've always tried to get for speed, to get the data as fast as possible from one place to the other. So did you help the first arbitrage traders to do their business, or how can I imagine data enabling the financial markets?
I would say that we talk about data and talk a little bit about not only quantitative numbers, right? But there's also analysis and there's also the news franchise, right? So there's two types of data, the quantitative and the qualitative. The important is speed. Touching the market before and than your competitors today, especially with algorithmic trading at the pinnacle, receiving pricing better, faster than your competitors can make the difference between winning and losing money. But then on the flip side, also, when you look at the power of news, it's not only important to understand what has happened in the market in the context of percentage, up or down price and quotes, but the news makes a huge difference because it makes the difference to understand not only what happened, but most importantly, why it happened. And what we're giving to the market is not only quantitative data, but we also give qualitative analytics. So we bring a why to the market, because you'll see normally the news is quoting Reuters, and most importantly, our unbiased reliability and trustworthiness, right? So when you read a Reuters news, it is what it says on the can, right? And that in financial markets is crucial. There's a lot of fake news, right? In times like these, where data is flowing at exponential rates, it is very important, even more than before, to separate the quality data that you can use for your decision making on a business environment from that data that is just noise, right? And where our clients buy from us is basically reliability, speed, and trustworthiness.
I want to jump into 2 points right here. On the one side, you said speed and say the quantitative data, which I feel like in recent years has gotten more and more commoditized. Correct me if I'm wrong, but who uses that kind of data versus who uses more the qualitative, the news data?
Actually, everybody needs data. Okay. And as much as it is true that the core data, just the pricing, has become more commoditized, especially after the internet landed and websites being freely available and making money on media and advertising, the truth is that there's a vast amount of entities that still need data. Our clients are at the same time providers of data and consumers of data. So if we think about who are the providers of data, then you have entities like the exchanges, you have brokers, you have central banks which are issuing their rates, you have the own banks issuing their pricing because they're market makers. But then on the other side, you have the consumers, and there are more banks, right? There's more brokers also consuming the data to intermediate between different parties. And also, more importantly, what right now is the important is clearly the consumers are basically the biggest consumers are the buy side. So if we split financial markets, you have the buy side and the sell side. The buy side basically is investing and providing the assets to invest into, whilst the sell side is providing liabilities, so all the debt. Yeah, so that's basically the connectivity. And when we see about who is consuming the most data or who has the most sophisticated data requirements, it's clearly the buy side. Yeah, because they use data to power their decision making and to reach what they call alpha, which basically alpha is the differentiation. It's basically the difference between the market benchmark and your performance, right? And that alpha is actually mostly reached via exploiting data anomalies, data patterns, and basically you need a huge amount of data. And as much as some of the core data, you can retrieve in a website, the volume of data is only growing, right? And the data can be just like ones and zeros digitally, but it can also be, so we've seen asset managers using satellite imagery to look at ports and look at stocks in particular places where the stocks are open air, right? And they're trying to get a competitive edge in different types of data to see how they can make a difference and how they can generate that much precious alpha.
How do you make sure that data and the news that you get, they don't have too much noise in them?
It's a very good question. It's a vast history that we have in consuming data, cleansing, and looking for data anomalies, right? And historically, it was actually a human process. It was like human people actually looking at data patterns and looking for anomalies to basically iron out, for example, time series, right? Where you saw there was a gap. But nowadays, more and more, we're now applying machine learning, to spot anomalies in our data. And basically, with technology, we're able to capture more data and increase the quality of the data that we produce and that we consume, normalize, aggregate, and then distribute.
You touched on machine learning. We also talked about commoditization of quantitative data and also the need for qualitative data. Do you see any other trends in the market data industry?
The trend now is about getting unstructured data, put data into neural networks, but there's a very big trend in exploiting data sets that hadn't been exploited before. Thanks to obviously technology, from my point of view, I always speak of technology. The biggest change that we've had recently beyond smartphone for consumer markets is basically the cloud. Because, historically, if you wanted to set up a financial firm or a technology firm, you had a huge barrier to entry in the infrastructure, right? So going back to your point, what I'll say is that the trend has been powered by cloud, which is basically limitless capacity and no barriers to entry, to exploit new sources of data, new sources of insight and differentiation. So as I said, this actually, when people say, well, what's going to change the world is, blockchain, machine learning, deep learning, cloud, all the different technologies that are flourishing. And I think that it's a combination of all of them. But it all started basically with virtualization and the cloud, right? And in terms of the trend that I was mentioning is using deep learning and natural language processing to analyze new sources of data that otherwise were not exploited. For example, was the case, the Panama Papers is news that hit the press not too long ago. And basically, the capacity to ingest vast amounts of contracts and documents that normally historically have always required a lot of people to read the document, to understand, to contextualize the documents. Basically, the biggest trend is to use natural language processes to ingest a vast amount of volume of documents and, using machines to understand those documents and understand what is being expressed, if it's an acquisition, if it's a merger, if it's an IPO, if it's any kind of documentation, not only in finance, but across businesses, and, using that data to automate processes and make a difference. So I think that basically what the biggest trend is, there is a massive growth in new use cases of data and capturing data more than there ever was. And also in that context, when you think about, I basically studied software engineering in the 2000s and everything was about normalization, databases, this, that, the other. Whilst now, that has lost a lot of relevance because you're able to normalize and match data in neural networks in a way that was never possible before. So you can actually not only capture more data, but we're able now to connect data faster than we ever could before. That's, from my point of view, one of the biggest trends which has changed in a not so distant future.
All those technologies that you described, I guess you're using them as Refinitiv to normalize your market data to make sense of it. But how am I, as a bank, as an asset manager, or even as a financial advisor, how am I even able to process this vast amount of data?
Actually, that's a very good question. Technology is a key part of the equation, right? And the data is one thing, delivery mechanism is actually as important or more, right? The flexibility in being able to consume the data in the delivery mechanism that you want for the use case that you want, from a online broker to an algorithmic trading machine to a human trader also, The important is to adapt to the use case of the client and give them the insight and the data exactly how they need to make a difference. So from giving the data, for example, in an automated application programming interface, which is an API, or, a file transfer protocol, and giving them a massive bulk feed, because they want to analyze the data at scale, right? To giving them a tool, a software graphical user interface, which they can navigate, to search for hidden trends that otherwise would be very hard to manage. I mentioned also before the speed, the reliability, but the volume, for example. What I'll say is that, just to give you an indicator, we give about 6 million updates per second, right? It's really even hard to comprehend, right? We have about 10 times the amount of data that Wikipedia holds. So, as I said, it's the data, but it's also the capacity and the sheer scale to distribute the data in every shape and form, from using statistical packages and third parties like MATLAB or R to anything more machine and algorithmic like an investment management portal or a wealth management portal. The importance is the capacity to deliver and delivery mechanism. And then also, which is also a big trend in the market, the value of data is also underlined by the complexity of licensing. It's turned ever more complex. I mean, you see the European Commission applying a lot of legislation, for example, on Google, on patenting, license. That's a part of the equation that we also give clients, which is the simplicity of the license. The amount of sources that we can aggregate and distribute and we can license on behalf of is unparalleled. So it simplifies because it reduces the number of entities with which you have to work with. So it brings a lot of simplicity and scalability to your business.
When you told me those numbers, that's crazy. Because what do I have to do as a user to even work with such vast amounts of data?
You have to contextualize the data. You need to make it relevant. And to make it relevant, you have to mix your proprietary data, your strategy with external data. So the key thing is how to contextualize the data and how to make it relevant. Something that you can only do by being close to the users of our technology. Okay, we always think in business terms with our clients, right? We first, that's something that is very well known, for example, for Steve Jobs, is that first you have to understand the business challenge and then you reverse engineer to technology, right? So from our point of view, the most important thing is to understand what the client is trying to achieve from a business angle. What is his motivation? What is he trying to achieve as a goal? And then you figure out in the back end everything that has to be engineered in terms of technologies to satisfy that requirement. Making it easy, making it accessible, and actually adapting to their business requirement.
Do you see any commonalities among your clients? What are their current business challenges?
Actually, there are common challenges to all industries right now. Right? There are common challenges because the world is right now at a pace of change that we've never had before, and it continues to to accelerate. You think about the three biggest trends that are affecting not only the financial industry, but it's affecting everything. It's affecting real estate, industry, trade, everything. They are basically demographics, the evolution of population, technology, which is evolving at a pace that has never evolved before, and also regulation, which is actually also growing at a faster pace, and new regulations hitting markets faster than ever before. So if I go through all those 3 points and you think about demographics, for example, right? Think about humanity and where we are now and where we come from. First point, it took us about 1,000 years to reach 1 billion population, right? Then we accelerated even further and it took us about 100 years to reach 2 billion. And then only in 50 years, we doubled that and reached 4 billion, right? So the pace it's exponential, only gets faster and faster. And today, we're reaching almost 8 billion. That is just to give you an indication on how the speed of change is only getting faster and faster and faster. So you're asking me what are the common changes of our clients? It's a common trend for the whole of business, for the whole of economics, which is changing, adapting to the world and how it's changing faster than even the world itself. So staying ahead of the changes, staying ahead of demographics, right? Serving clients faster and better all the time. You think about the relationship that probably my father had with a bank versus what I have with a bank, where, I never actually these days would think I actually have to scratch my head to realize when I went last time to a branch office of a bank, whilst my father probably went on a weekly basis to his branch office for certain things. So the changes in demographics, the capacity to serve a growing population is a challenge for our clients, but it's the challenge for the whole of the industry. If we mention 3 topics, then we think about technology. And if we think about technology and the evolution, if I was giving you figures about demographics before, the context of technology, for example, the telephone, which is something we're very commonly using today in a different way than our parents also, took 75 years for the telephone to reach 50 million users. 75 years. That's like 3/4 of a century. We did like 2 world wars and a Cold War in that period to reach 50 million users, which is a fraction of the human population. It took 38 years for radio to reach also 50 million. 38. And then you think about TV, which we're actually, in my case, watching less and less all the time. It took 13 years. So now, recent history, to reach 50 million users, the internet and Facebook both took around 4 years. And the most groundbreaking change from a technology perspective, just to give you an indication of the sheer pace at which we are evolving, right? The last evolution was Pokemon Go, which reached the same number of users, 50 million users, in just 19 days. 19 days. So think about telephones, 75 years, and then you think about Pokemon Go, 19 days. You just think about the sheer volume of change at which businesses are exposed to. Think about Blockbuster and Netflix. Think about bookstores and Amazon. Think about TV and YouTube. And it's just changing so fast that you don't have an option not to innovate. Like, innovation now is not like it used to be, a way of differentiating and growing. It's a way today of surviving. If you do not innovate, you do not survive. Because if you continue doing the business the way you used to, you're actually preparing a recipe for extinction, right? And then out of the 3 trends, the last one, which is actually affecting also all of the industries, but especially after the subprime crisis affecting banks, is regulation. Right now, banks basically are affected by regulation, and new regulations are hitting the market in estimate every 12 minutes. So you imagine trying to run a business and planning for the future when every 12 minutes a regulation is changing your business model, right? And the volume of bills that banks have been having to pay to the governments, especially because of mistreating investors, right? Not giving them the service that they were acquiring for, mainly because of lack of transparency. So the volume of regulation that is affecting the market is actually unparalleled and actually, evolving much more than ever has in history. Basically, that's it. I mean, demographics, technology, and regulation is what's affecting the financial markets, but the whole of the industry. I mean, all of the global industries, as I mentioned before, trading, retailers, all of the industries are being affected by these trends. And it's really fast to keep up to pace.
But how do you keep up to pace? How do you keep up with the Pokemon Go's of this world? As a bank, they are usually not the ones very innovative, right? They are not the ones that are known for their decision speed. How do you, as a bank, not go under in this environment?
As I said, it's about evolving the business model, but it's also it's a transition, right? It's a transition of what they call banking as a service to banking as a platform. So how do you evolve? You build a platform that is future-proof, which is actually extremely hard. You find new ways of distributing your services. I'm not going to talk about banks, but just to give you an interesting, contrast. When you look about, I mentioned before, Pokemon Go, what was the difference between Pokemon Go, internet, radio, TV? It's basically the ability to run a business across a platform that is already open and scalable. So what was the difference with Pokemon Go? The difference was that Pokemon Go was distributed over an existing platform, right? So Android, iOS, and Mac operating systems in mobile devices. So because we have a smartphone, because we all have a smartphone already, and we all have access to internet and data at our fingertips, because of that, you're able to distribute your services at a much larger scale and faster than ever before. You mentioned how do you keep ahead of pace, etc. You think about your business as a platform that is prepared for change. That's the only way to do it.
What are skills that you would need in such a new environment? As a lot of our listeners are young students and just people starting in the industry are thinking about maybe going into the industry. What are skills that you should develop in such an environment?
From my point of view, it's all down to curiosity. The most important skill from my point of view that we have to nourish, work upon, and embrace is curiosity. Because you understand, skills versus knowledge. What do I have to learn? What do I have to learn in university? What do I have to read? The truth is that everything that you learn in university, apart from the training yourself to learn, which is basically what it's all about, which is very related to curiosity, in terms of knowledge, is not very relevant, because you leave university and the things that you were taught might have changed by the time you hit your professional career, because regulation has changed, technology has changed, right? So I'll give you an example. I remember, I think it was 2004, e-commerce and platforms and e-business. Just to give you an indication, at that time we were studying what was called Web 2.0, which was the capacity for websites to consume data from the users and distribute it again, right? Because up to that time, all the websites that were called 1.0 were websites where there was only a distribution of data. So the content was owned by the website. But you imagine, I studied Web 2.0 before Facebook arrived, right? You think about what changed. So coming back to your point, what is the key skill? It is curiosity, because of the speed of change. So you have to stay curious and stay greedy for learning, right? Because everything is going to change. Everything is constantly, and just like think about it, everything is in constant change. Hence, all the knowledge is going to become obsolete. Hence, you have to continue staying curious to adapt and refresh your knowledge constantly.
Is there any other skills that people should learn outside of curiosity?
I mentioned curiosity, but without a doubt, the tool and the skill that really makes the difference between somebody that just passes by and somebody that really makes a difference. Martin Luther King, Gandhi, Steve Jobs, all those people, what did they have in common? Barack Obama. What is it? What is it about those people that make them so special? It is without a doubt their capacity to communicate, but not just communicate as in spreading a message, but the ability to communicate in a way that triggers a reaction on the receiving end. What I'm trying to say is that the way to influence society is via effective communication. We see this most commonly, and people don't realize it for how common it is, but we see it every day in the press and the news. Basically, for example, politics. What is the key part of politics? And it also relates to business. It's being able to communicate in a way that is able to change the thought on the receiving end. So it's not only about knowing and learning and being up to speed of change, but being able to spread messages that can change the way people think. And that happens in business, in humanity, in your personal, in your environment, in your family, your friends. So both digitally and sending messages and posting over Facebook, for example, or just speaking to somebody or to a broad audience and being able to trigger a reaction, to make people think that what you're saying is actually common sense and a no-brainer, so that it triggers a reaction. So if you tell me beyond curiosity and keeping savvy for learning, the other one is train your communication abilities. Don't ever stop working on them, because your capacity to influence other people's minds is the difference between succeeding and losing, not only professionally, but in your life also. So that's it. Don't stop training your communication skills. They will make your difference.
I love it. I love it. Anything you can leave the audience with in terms of recruiting? Like, do you test if you have an interview? Do you test for those communication skills? Or do you have any other tips that you're looking in a hire for?
Absolutely. That's actually when you come across in an interview, that's from my point of view, one of those things that I really dig into, because technical knowledge, market knowledge, as I said, you can train those. You can work on those. I can train somebody to know about something or understand or learn something, how to do it. But the capacity to communicate clearly and communicate effectively is a very rare ability that when you have it, it really makes a very big difference. Conflicts internally within business, it's all misunderstandings. It's a different way of understanding something. So I definitely, when I go into an interview, one of the clear things that I'm trying to grasp from that person is that person able to come across effectively in terms of communication. It is absolutely fundamental. I'm not even scared about being shy, introverted, extroverted. Everybody's a bit nervous in their interviews. I think it's fair, it's normal, it's good. But are you able to communicate? That is the big question, right? That's from my point of view, one of the key things that I look across. And, communicate can be written, verbally, body language, right? You use all of them, right? So being able to communicate effectively across all the channels, that is one of the key parts that I look for. I look at the CV, I look at the structure, right? I look at the content, I look at how it comes across. The interview, the same thing, but verbally and with body language. But it's all forms of communication, written, verbal, body, everything counts. And that's definitely one of the key criteria when I'm searching for talent.
Perfect, Jorge. Thank you so much. Any last words that you want to leave our audience with? Any books you recommend? Like literally anything you want to tell them as a last sentence?
I would like to, first of all, thank you. It's actually a great opportunity. It's been a lot of fun to come across these points. I would invite everybody to connect with me via LinkedIn because I have a public profile. You can search me as Jorge Tavio. And basically, as I said, the number one is be curious and be passionate about the art of communication, which is something that I'm really passionate about. And I invite everybody who's on the podcast to work on it because it's a precious jewel, which is actually fun as you get better at it.
Perfect. Thank you so much for your time, Jorge, and I hope you have a great day.
You too, Andres. Thank you very much, everybody, for listening.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
Disclaimer. Information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. This podcast is for informational and educational purposes only, and it does not contain an offer to sell or buy any sort of financial products and should not be treated as advertisement for such. Any copying, distribution, or reproduction of this podcast without the prior permission of the creators of the podcast is strictly prohibited.